What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll look at a macro level view of the S&P 500, NASDAQ 100, the Dow Jones, the Russell 2000, the VIX, and Bitcoin. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the SPX, we did close the week higher. And remember, I'm looking at a weekly chart, so every candlestick on the chart does represent one entire week's worth of price action. We could see another week that we did have a little bit of volatility, and we did see buyers stepping in yet again and buying up that dip. The price action continues to close back over the 5 EMA on the weekly chart, and we still have all of these moving averages very decisively trending to the bullish direction. Remember, on the macro level view, our price target for the SPX is up here at 43.06, and we're getting very close to that target, only about 2% away now from hitting that level. As we continue to climb higher, remember that risk does increase in the stock market, and when we do hit these price targets, it does increase the probability that we could go through a correction. But right now, it does look like we're going to continue to trend towards that level. Remember, we do have the Fed meeting coming up in the middle of June, and we do have CPI data coming out. So if we do see too much inflation and the Fed does have to act on that, we could easily see a reversal of this bull market very quickly. But right now, we see no reason to be bearish because the price action and the trend on the weekly chart are still very bullish. We can also see the upper Bollinger Band is still way up here at 43.41, so we're not even close to the upper Bollinger Band on the weekly chart, so we aren't going to get any retracement or any resistance from the Bollinger Bands. On the monthly chart, we can also see the price action currently trading well above the 5 EMA, and we still have the very strong bull trend on this monthly chart. Again, on the monthly chart, we still have plenty of room until we get to that upper Bollinger Band, so we don't see any reason that we're running into resistance as far as the Bollinger Bands go. Let's also jump over to the Bear Bull survey and check in on what's currently going on with the survey results. We can see this week we did get quite a few more bulls, and we're currently just over 44% bulls. We're down to only 19.8% bears. And remember, this survey is usually a contrarian indication. Normally, if you get way too many bulls and not enough bears, that means there's way too much greed in the market. And just like Warren Buffett always says, you want to get fearful when everybody else is greedy. Now, this indicator by itself doesn't really mean anything, but it's definitely something to be aware of that we're seeing a lot more bulls than bears as we continue to go higher towards these all-time high prices. And we're getting close to our price target at SPX 43.06. You can see we still have plenty of neutral people as well. 36.2% of the people are still neutral, and they could still join the bear camp or the bull camp. And if they join the bulls, we could see a lot more velocity going higher in the market before we see a correction. So just looking at the survey, it definitely looks like we're getting a little more greedy, and it definitely looks like there's still potential for these neutral people to join the bulls and potentially push the market higher. Again, I don't think this matters too much because I think right now, going into the middle of June, most of the fate lies with the Fed and what they're going to do with interest rates. So next, let's look at the NDX weekly chart. And on the NDX, we did see a huge buy the dip week. For the week, we basically closed exactly where we opened, but we can see all of the price action was to the downside and that dip did get bought up. So we still see bulls stepping in and buying the dip. Now, whether or not this is smart money trying to program retail to buy the dip while they unload their positions, or this is really just still a bull market is still to be determined. But right now, we see the price action still well above the 5 EMA on the weekly chart, and we still have all of these moving averages stacked to the bull side. So on the NDX, our price target is up here at 14,488, which is about a 5% upside move until we get to that level. If the NDX actually does get to that price target, we are likely going to exceed our price target on the SPX of 43.06, and that's just fine, but we don't want to look ahead. Right now, we still see SPX 43.06 as the price target, and we need to get a decisive price action close above that level before we raise our price target. So on the NDX, it does hint that we could be seeing higher prices if this market does remain bullish, and we don't actually see the Fed causing the market to want to sell off. So the price action and the trend are still bullish on the NDX. And again, we still have plenty of room to the upper Bollinger Band on the weekly chart. So we're not going to get any resistance from the weekly Bollinger Band. On the monthly chart of the NDX, we also see a bull market still with the price action over the 5 EMA and still all of the moving averages stacked to the bull side. Again, our price target is well within the upper Bollinger Band on the monthly chart. So it does seem like it's in the realm of possibilities that we are going to continue to climb higher through summer. On the Dow Jones weekly chart, we closed basically exactly where we opened yet again, and we still see people are buying up the dip. On the Dow Jones, we're still in a bull market with the price action above the 5 EMA, and all of these moving averages are still very well stacked to the bull side. We have plenty of upside left in the Bollinger Bands on the weekly chart as well. On the monthly chart of the Dow, we also see the price action above the 5 EMA. The bull trend is still intact, and we still have room in the upper Bollinger Bands to continue to go higher. On the Russell 2000, we see a slightly different picture, and we might have to zoom in a little bit here to see it. But we do see on the weekly chart, the 13 EMA is currently below the 20 simple moving average. So by definition, the Russell 2000 is not in a full bull trend because we don't have the moving averages all stacked to the bull side. However, if you're looking at the price action, you can also see that the Russell 2000 has basically been going sideways for many weeks now. So it's no surprise to see that we're not in a full bull trend because the Russell 2000 has been doing a lot of sideways price action movement. Now, sideways price action is not necessarily bearish or bullish. It just means the Russell 2000 is consolidating and building up energy for the next major move. So right now, if you're looking at the price action, it's well above the 5 EMA, and we still are trading above that positive sloping 20 simple moving average. So if you're going to give a bias to the Russell 2000, it's still going to be a bullish bias because the price action is still bullish on the weekly chart. You can see the Bollinger Bands are definitely contracting and they are starting to squeeze, which does verify we're building up energy in the Russell 2000s, getting ready for a big move. So there's plenty of room on both sides of the Bollinger Band for the Russell 2000 to move. But right now, we have to give the benefit of the doubt to the bulls because the price action is above all of the moving averages. On the monthly chart of the Russell, we can definitely see why the Russell is going sideways because it did get way too far overextended. The price action is still above the 5 EMA on the monthly chart, and all of the moving averages are still stacked to the bull side. So overall, the Russell 2000 still looks bullish. It just looks like it went way too far, way too fast, and it's just been in a sideways consolidation. Remember that indices can correct through time, and they don't always have to correct through price. So the sideways movement in the Russell 2000 is somewhat of a bullish correction because we don't see correction through price. We see the Russell 2000 correcting through time. On the VIX weekly chart, we see the VIX closing below our support level. And again, the VIX is verifying that we are in a bull market. The VIX is a measurement of fear, and we see the VIX closing near the lows of support in the low 16s. That means there's no fear left in the market. And even though fear could come back at the drop of a hat, we currently don't see a lot of fear in the VIX, which means the market is likely going to continue to go up higher while the VIX is going lower. So right now, there's no concerns in the VIX or any warning signs to be aware of because the VIX is heading lower as the stock market heads higher. On Bitcoin, we currently see the price action trading just above the 50 EMA, which is on a weekly chart. So we definitely do see Bitcoin looking a lot weaker. The price action has dropped through all of the moving averages except for the 50 EMA, and that's currently where Bitcoin is finding support, right around that $33,000 50 EMA. Now, Bitcoin does have resistance at 39,000, and we can see that Bitcoin is failing to close above that level. We can also see the 5 EMA has crossed below the 13 EMA, and the 13 EMA has also crossed below that 20 simple moving average. Another thing to note on Bitcoin is that the 20 simple moving average has flatlined, and it no longer has a positive or a negative slope. So it does mean that we're not getting any validation from the 20 simple moving average on where the momentum is in Bitcoin. You can also see there's somewhat of a bear pennant forming because we have a very bearish candle, and then we do have this consolidation wedge forming, and it is likely going to break to the upside or the downside very soon. So right now we're going to get verification of if Bitcoin's going lower or higher once we get a breakout of this consolidation. So if Bitcoin does start breaking below this 50 EMA, that will likely mean Bitcoin is going into a deeper bear market, and it did see a top back here in the $60,000 range. Now, if Bitcoin starts breaking back above the 5 EMA around 40,000 and getting price action back above some of these moving averages, we could start seeing the bullish trend coming back. But right now, Bitcoin looks very bearish, and it's only one support level away from breaking down and going much lower. On the monthly chart for Bitcoin, we could see exactly what happened here. And remember, we were saying that Bitcoin was getting way too far overextended. And I was saying that means Bitcoin could go through a 50% correction. Well, here we are today, and we saw exactly what we predicted with Bitcoin flushing down and coming all the way back down to that 13 EMA. Currently, we don't see enough buyers of the dip to drive Bitcoin higher. And that's completely normal after something goes through a huge crash like that, and it does shake out a lot of the bullish sentiment. There's not a ton of people rushing back into Bitcoin at this point, and everybody that bought Bitcoin way up here in the $60,000 range is either trapped holding bags or they're taking huge losses, and the last thing they're thinking about is buying back into Bitcoin right now. So just don't expect to see Bitcoin running to brand new all-time highs in the very near future, because it is going to take a lot of damage repair to get this chart back to bullish and to get that bullish sentiment back into the cryptocurrency traders. One other thing to note on the monthly chart is the 5 EMA on Bitcoin is negatively sloping, and if it continues to slope negative and the price action stays below that EMA, we could continue to see Bitcoin staying in this bear market. So jumping back over to the SPX to summarize, we definitely do have a lot of concern going into the middle of June because there is a lot of reasons to be concerned about inflation and the Fed having to act and raising rates. But right now, if we're looking at the price action and the trends and we're strictly staying objective and we're blocking out all of the noise, we can easily see that we're still in a bull market and we continue to stay in this bullish trend with bullish price action. That does mean we should be seeing SPX continue to climb to 4306. Now, once we get to 4306, anything is possible and we could see a correction, or the FOMC meeting could go horribly wrong and we could see rates getting raised sooner than the Fed expected, and that also could trigger a bearish market. But right now, we don't know exactly what's going to happen, so we just have to stay patient and stay objective, and we can see that we are still in a bull market. Also remember, on the Stocks Channel Discord server, I'm doing intraday updates and analysis to help you navigate this market and always stay on the right side of the trade. I also bring new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description below. So thanks for watching, everybody. I hope you all are enjoying your weekends, and as always, I will see you in the next episode.